Right, let's move on to the news. Right, today I'd like to discuss a bit on the big question, is the Bitcoin buzz cooling, right? So since March, Bitcoin has approached the 70,000 mark 6 times, but each attempt was met with selling pressure that pushed price lower. The most recent decline saw Bitcoin drop from 70,068 to 48,955, a 30% decrease. Now, during this period, the crypto fear and greed index fell to 17, right, indicating extreme fear. So although the index has since recovered to 33, it remains in the fear category, even as Bitcoin has rebounded slightly to trade around 57 as of writing. Bitcoin ETFs suffered the most last week with 643 million in outflows, while Ethereum funds lost 98 million. Now, given this negative sentiment, it's reasonable to question whether the Bitcoin hype is over and if a return to a crypto winter is imminent. Let's examine the factors contributing to this downturn. Now, first of all, Bitcoin is considered a risk asset, something that I mentioned before. It's always branded as Gold 2.0. I don't look at it at this current moment, even though people like to brand it that way, but I categorize it more as a risk asset, risk-on asset. Now, meaning, when I say this, meaning it tends to decline when the US market falls. So the S&P 500 recently had its worst week since March 2023, highlighting this correlation. So if the Federal Reserve opts for an aggressive rate cut, it could signal heightened economic concerns or a perception of lagging behind in addressing an economic slowdown, prompting investors to reduce exposure to risk assets like Bitcoin and stocks. Additionally, September has historically been a challenging month for US stocks, and the September effect seems to impact the Bitcoin market similarly. The early performance of Bitcoin this month supports this theory. So you have the Federal Reserve, the threat of it doing a 50 basis point rate cut that actually sends a signal. It's, economy is not as good as people think it is. And then you have this September effect added in where, I've shown you the charts before. September is just not a really good month. Something that I'll show you more stats later. What happens after September? That is the interesting part of it, right? So we'll see. These two added inside there. Now, however, while the market often emphasizes the September effect due to past trends, right? The limited sample size makes it unreliable predictor of future performance. We have only just a couple, Bitcoin is not really, it doesn't have a really, really long history. So when with this small sample size, can we really say that this is it? This is the correct one? So that's something that you need to take into it. You just can't say for real, this is it, because due to sample size, but you can use it in a way and say, okay, I can use it as a guidance, but is it 100%? No, due to the small sample size. Anyway, let's put it this way. If anyone wants to say that we can use it, even if we disregard the limited sample size and take it as it is, then there's much to expect once October rolls in, if you look into that way. Now, historically, Bitcoin's weakness in September has often been followed by gains. Since 2013, an average September decline of 5% has typically been followed by a 22% gain in October and a 46% increase in November during the 2021 bull run, which trend was dubbed Uptober. Okay, there's a name for it even. The only exception to October gains were in 2014, where you had a negative 12.95%, and 2018 were a negative 3.83%, both bear market years. You really need to know this. These were bear market years. Notably, Bitcoin is currently in a halving year, and halving year are known as bullish years. So if we want to go back and just look into the halving years alone, During the past halving years, such as 2016 and 2020, the months from October to December were notably strong for Bitcoin, with significant returns in each month. In 2016, October, November, and December returns were 14.71%, 5.42%, and 30.8% respectively. In 2020, it was even higher. Those months saw returns of 27.7%, 42.95%, and 46.92%. So these are not small numbers, right? So there are things that we need to look at. Now, this, like I said, it's a limited small sample size. Even like this halving over here, we are only taking halvings 2 years. Does 2 years really represent the whole thing? Okay, so one thing, if we want to analyze it, we can't just analyze based on historical, especially if the history has very limited sample sizes. What we need to do is look at the cold hard facts. What are the numbers telling us? Okay, so that comes to the next part over here. This is the inflow and outflow of the ETFs. These are cold hard facts. Though the facts remain crucial. The net inflow to date stands at 16.88 billion. This is a positive inflow, as you can see right here. Okay, even if you factor in the 20.01 billion outflow from Grayscale, okay, we still have a positive. Earlier in the year, Bloomberg analysts predicted that if Bitcoin ETF attracted 10 to 15 billion, they would be considered successful. They have surpassed this threshold. If you take the rest out of equation and just leave IBIT alone, IBIT alone already surpassed it. Okay, that you can see that this is very clear. Now, furthermore, Bitcoin ETFs now collectively have over 1,000 institutional holders just after 2 13F reporting periods, which is unprecedented and reflects the underlying strength of this asset class. These are cold hard facts at the moment. Will it last forever like that? Nobody knows. It may not. But at this current moment, these are the facts. The big boys, they are in, and they are not in just 1, 2 in big numbers right here. So why is Bitcoin still under pressure despite all this strong adoption, all this buying, all this positive inflow? Why is it still down? People question that. But you need to know one thing. It is much higher than pre-ETF period, right? So because always people think that, hey, look over here, it should be like in the hundreds and thousands, and like what Michael Saylor came in last night and just announced, not last night, a couple of days ago, that Bitcoin in the future would be 13 million, if I'm not wrong, on CNBC per coin. So this is something I would say I don't want to even look that far as yet, because it's I think for it to hit 13 million, it will be a catastrophe in the economy for that to happen, and I don't wish that to happen. Okay, really? But if you look into it in detail, price has been high. It's just not as high as what people expect it to be. Okay, so whatever that is pressing Bitcoin price down, it is because of this. There were large-scale sell-off from entities like Germany, Mt. Gox, and possibly the US government, which has been moving billions of dollars worth of seized Bitcoin to exchange. Now, these were not because that they don't believe in the value of Bitcoin. Germany had to sell because it's part of the law. Okay, they have to sell seized Bitcoins, not Bitcoins that they bought for investment. Okay, they were selling off seized Bitcoins. Mt. Gox, their Bitcoins were basically disappeared. Now they got it back, and in that process, they may have there are many years of them losing all those income. So they probably had to sell certain to cover whatever expenses incurred during this period of time where they lost their Bitcoin, right? And the US government also, they are one of the biggest holders of Bitcoin, seized Bitcoin, but they are not selling the whole lot. They are selling, and it's just, we are speculating that they are selling. They're just moving. Whenever the traders see that the US government transfers Bitcoin to the exchange, they always presume they're selling. We can also presume it's selling too, but these are not investments per se. These were seized Bitcoins. Okay. So if you look it into that way, that's a different thing, because when we talk about investing, we have to refer to investors. So meanwhile, institutions appear to be holding onto their Bitcoin, suggesting continued confidence in the asset despite the volatility. Okay, so this is more of an approach in a way that is easier to understand and not just jump into conclusions. Now, if you were to worry so much, would Bitcoin go much lower? Yeah, of course, there's this probability that it can retest the 40,000 area. But if you put on the higher time frame charts, right, from a technical analyst perspective, just purely look at the technical analysis, right? This is more of a corrective structure, and we know after a corrective structure and the next impulse will come, and that impulse will be towards the upside. So let's see, let's wait, only time will tell. We have about what to say, like 19 days, right? 20 days, about 20 days until no, we have about then 19 days until the next month, October. So let's see, let's wait. Okay, so with that, that's the report for today.